All right, so we'll start. This will be the first webinar for 2017. All right, so again, for those who are new, who just joined us, late in December and recently, this webinar will be done on conducted on a weekly basis every Monday in the evening time. And the whole purpose of this webinar is to share with you some of our potential outlook going into this particular week itself. All right, and of course, if we have potential trades, we also share with you, right? And also using this as a platform for educational purpose. That means if you have any questions, feel free to either type it in the Slack channel, right, under the Forex Winner Circle channel, or you can also type it directly into TeamViewer under the message section. All right. So again, right, for those who have been following us, all right, I'd like to welcome you back into trading. So last week itself, a quick recap is I'll bring you to the calendar. Right, last week itself, not we didn't trade much, simply because first week of the year usually it's pretty quiet, right? But I think if you are actively following the market last week, you realize that it's actually not the case, all right? Because even though I'm not actively trading, been monitoring the market itself, but we do have some good trade opportunities, all right, that's presented in the first week of this year. Right, and of course, I know some of you managed to capture it, right? For example, Pound Yen was one example. Another one was actually Aussie Kiwi, but we didn't manage to catch it at the bottom. Okay, but that one was shared actually late last year regarding Aussie Kiwi. Later, I'll bring you to the charts to share more. Right, but last week, focus will be mainly on the NFP, right, as well as average hourly earning. So this one, some traders were pretty confused because NFP came in less than expected, right? So a lot of traders might expect the initial reaction on dollar to be selling off, right? Basically bearish on dollar. But what we realize is that, if you follow the market on Friday night, you realize that dollar actually strengthened. Reason can come from two factors, right? One is you look at the average hourly earning, all right, it's actually better than the expected, right? And if you compare it to the previous month data, right, is way better as well, right? It's a huge improvement. And if you look back into the historical data for average hourly earnings, okay, 0.4 is actually one of the highest in the past 9 months, right? And this is very important because average hourly earnings will impact inflation in the US as well, and that will directly impact the Fed having the need to actually increase interest rate. Okay, and if you look at non-farm payroll, right, it's not that bad because we have an upward revision from last month from 178 to 204, right? So it's positive data figure as well, right? And of course, if you look at unemployment rate, it's also under full employment. All right, 4.7 is actually one of the lowest in the US as well. Right, so all this gives rise to overall positive sentiment, bullish sentiment on the dollar, right? Because traders are still expecting, according to what Yellen said, all right, 3 rate hikes in 2017. So as long as the US data doesn't differ too much and is on track, we might still continue to expect the Fed to increase 3 times in their interest rate in 2017, right? So that gives rise to a bullish momentum and sentiment in the dollar. All right, so for this week itself, in terms of economic data wise, it's pretty quiet in this particular week. Today we have really nothing much, but if you have been monitoring the market, you realize that yen has weakened a lot. Yen pairs has weakened a lot. All right, Japanese yen has strengthened during the London session, and oil market actually dropped as well. All right, so later we'll take a look at the chart. And then going on for this particular week, some of the key data that you need to take note on is tomorrow on Australian dollar. All right, and of course, Thursday, we have some FOMC members speaking. Not that crucial, but the important one will be on Friday because Yellen will be speaking, right, at 8 a.m. Followed by in the US session, Friday night, we have core retail sales and PPI. Right, and then of course ending off the week with UOM consumer sentiment. So overall, this week focus on economic data wise is not much. All right, so just take note on Friday if you are actively trading the US dollar itself. All right, so that's about it in terms of risk event and economic data for for this week. Right, the focus is just on Friday. So let me bring you to the charts. All right, we'll focus more on what are some of the key opportunities that we can take for this week as well as for 2017 as a whole. Right, so I'll bring you to dollar index first. We always look at dollar index as a guide, all right, because a lot of pairs are in the dollar. So dollar index, as of last year, all right, late last year, what it did was price completed the top over here, right? This is based on wave theory, right? So what we are expecting right now is some form of correction, right, from this uptrend. But overall, we are expecting more upside on the dollar, right? At least towards the 106.2 area for the dollar index, right? So what it means for you, right, is that even if you don't trade this index directly, what you can impact or help you is that you want to be overall looking for opportunity to long dollar instead of shorting it, right? And of course, the most ideal situation is for this retracement to occur, right? And then it comes down lower, and then you can actually look for opportunities to buy it even cheaper, right? But at any point of time right now over here, okay, if it's presented a very good opportunity for you to long dollar, you might want to consider taking that opportunity to just long dollar, right? So this is a quick overview on dollar index, and technical wise as well as fundamental wise, we are actually bullish on dollar. Right, so the most common and major currency pairs to look out for is of course then euro dollar, and when we expect dollar to go up, euro dollar will naturally be inversely correlated and gonna be expecting it to go down. Okay, so I'm going to show you on a bigger time frame perspective, all right, on daily time frame. We are expecting euro dollar to actually break below parity, all right? Basically means break below 1.00. This is a huge psychological number, all right? But based on this current technical analysis, there's a high probability that it can break. Okay, right now it's trading around 1.0525, all right? So if you have followed us last Friday, right, we shorted the euro dollar because after NFP, right, right after NFP, we shorted the euro dollar. So we are holding it with target TP open, meaning we want to ride this wave as far as we can once we enter a short position, right? And of course, ultimately, if we can aim for price hitting the 0.96, that will be a huge amount of profits to be captured. Okay, but I don't trade the daily time frame, but this is just giving you guys a broader term perspective as to where the overall direction is going to go. Okay, so I bring you down to smaller time frame perspective to show you opportunities of why we shorted it. All right, on the H1 it becomes clearer. Okay, so this is what happened. Overall, we are on a bigger time frame perspective, we are actually bearish on euro dollar, right? So I'm looking out for opportunities to take short, right, on euro dollar. Okay, so this was what happened, right? This entire up move itself is actually a correction, all right? It's a retracement move, and last Friday itself, with the positive the dollar sentiment, that provided that catalyst to actually push euro dollar down, right? So this entire one candle over here, as you can see, this huge red bearish candle was the signal that we actually entered on the sell, right? So we shorted around 1.05. Actually, I shorted slightly higher, 1.055, right? And of course, my stop loss is just above this high. Okay, so it's actually less than 100 pip stop loss, and I'm actually holding my take profit open. Okay, and I'm riding as far as I can for this particular trade. So for you guys who haven't shorted or is still looking for opportunities to short on the euro dollar, right? We do have some other opportunities that you can take note of, right? So let me go over to this chart. Right, so for those who understand Elliott wave, you can trade based on this. But for those who are still not very familiar with wave theory, all right, use this as a direction. Right, use the strategies that we have taught in the master classes that you guys have attended to engage a trade. Right, so over here, the direction on euro dollar is bearish. All right, so technical wise, you need to find a reason for taking a trade, and the reason over here can be this divergence that it's giving you that reason to take the trade, right? You can see that price actually prints a higher high, forming kind of a double top over here. right? And if you look at your RSI, you can see that it's a very clear divergence because your high of your RSI is actually making lower high, right? And the criteria for this divergence setup is you want to have a confirmation that price break below the neckline, okay, which you get it on the NFP night itself, all right? And what you're waiting for then, once all these are aligned, you are just waiting for a retracement towards the 61.8 Fibonacci level. Right, so right now you have pinpoint your 61.8 Fibonacci level pulling from this high to this low, right? I zoom in a little bit. Right, so what you're waiting for is a potential retracement higher back towards the 61.8 Fibonacci level, and you'll be looking for a short opportunity. Right, so based on this strategy, you will want to wait for a retracement back towards this area at the 61.8, and then you look for a short opportunity going lower. Right, and based on this strategy itself, of course, you have very concrete level to put your stop loss and take profit as well. If you shorted here, right, your stop loss needs to go above this high, right, which should be the same stop loss as what I did, right? You can put slightly higher to give it some room for spread. First take profit can be at the previous low over here, right? Because this previous low might act as a form of support. Right, so you might want to at least take some form of take profit, right? A little bit of your profit, partial profits out of your trade first, and then if you want, you can go for extended target, right? Aiming for the 127 extension, right? Because most of the time price will react at the 127 extension, so you might again consider wanting to take some profits off if price hits that 127 at 104, 1.0480. Okay, and now of course, if you are those who prefer to follow the overall trend, you can keep your TP open, right, and ride the overall trend and just trail your stop loss accordingly. Right, so this is one opportunity that is very close, that might happen, and you might be able to still take this opportunity. Right, I'm gonna screenshot this for you guys later on as well, right, for reference. Right, so that's euro dollar. Just pause over here to quick check any question on your side that you want to clarify, at least for this first, right? Because it's a new year, you might need some refresher or even some clarification moving forward as well. All good? Okay, then we'll look at the next pair. All right, looking at the next major, which is pound dollar. All right, pound dollar over here, I'm going to bring you to the higher time frame perspective as well. On daily perspective, we are expecting that down move, right, as low as potentially reaching 1.15. Right, so right now it's trading at 1.2180. That's close to about 600 pips. Right, if you can catch it, that will be a very good trade as well. Right, but daily time frame is it's going to be tricky because not a lot of traders are able to hold that kind of long-term position. So most of the time we drop to lower time frame to take a look for opportunities. Right, so this one on the hourly, right, we didn't take this trade because when NFP occurs, right, this break itself didn't provide any form of retracement for me personally to take that trade. But you can see that it's a very good trade right now if you have taken during the NFP session. Okay, so again, even ourselves, right, when we are more experienced in the market, we do miss kind of profitable trades as well, right? So it's very common if you also miss profitable opportunities in the market. But important thing is don't chase price, right? So allow price to come to you, or if it's too late, then just look for another opportunity to trade, right? But having said that, if you are still looking for any opportunities right now, I don't think we have any other than waiting for some form of decent retracement back up, right? So not much opportunity that you can really take on pound dollar, except for if you are going for the more aggressive kind. All right, wait for this retracement to come back at least towards 50% Fibonacci level, all right, because we do have some kind of confluence there, right? Just show you what I meant by that confluence. Over here, your previous support, all right, broken. All right, so right now with confluence of 50% Fibonacci, if your price comes back up towards that level, it might act as a form of resistance and push price further lower. Right, but this is not a structure strategy, because structure you need to have at least 4 swings. But this is a very aggressive entry, because after this strong down move, all right, you just simply look for retracement and expect price to move in the overall same trend. Okay, so this one I won't share much, because it's not according to any strategies that we share with you guys. But if you're aggressive, do take a look at this level if price comes back up towards that. Right, so that's pound dollar. Dollar yen is another one interesting, because just now I mentioned right at the start of this webinar that today this London session, right, you can see all the yen pairs strengthening, right? So all the yen pairs are actually falling off, right? Japanese yen strengthened, and all the yen pairs are falling, right? But if you ask me, dollar yen, my sentiment and my bias to it over a longer term period on a daily time frame, I'm actually expecting some form of down move after this huge correction, this huge move towards upside, right? I'm expecting a reversal or even at least a retracement towards the downside. Okay, so buying on dollar yen, right, would be a very short time trade plan, right? So on a very short term plan, all right, you can still look for buy opportunities on dollar yen. All right, I'll just show you some what I'm looking out for. Trade plan here, you can still look for buy opportunities on the shorter term, all right, targeting as close as 119.65, right? So if you look at this, current price is at 116.68, all right, so that's just about 200 pips, all right, so it's not a lot of room for it to go higher, but you can still look for some short-term profit to capture if you manage to catch it. Right, so this one, let me go over to show you what you can do, or if you miss it already. All right, you have actually 2 opportunities that you can look out for. All right, some confluence that's happening on dollar yen as well. Number one I want to show you is over here. You can actually see some form of divergence. All right, price fall lower, but your RSI actually prints a higher low, and then obviously the neckline has been broken as well in this double bottom. All right, this neckline has been broken, price has pushed way high up. Right, so what we are looking out for right now is price has formed new high. All right, so we are looking out for this 61.8 retracement back down over here, right, to trade off that divergence setup. So again, if you want to look out for this trade, okay, your long position can be put here at the 61.8. Stop loss has to go below the previous low, give it a little room for price to move for spread. And of course, your take profit one will be your previous structure over here, okay, because this can act as an immediate resistance. And if you want to go for take profit two, right, you can use that 127 extension, aiming up to 118.20. All right, and of course, if you want to go for even more profit, all right, higher target take profit level, you can aim for the 119 as I shared over here, right, 119.70 or 65, 119.65. So that can be your TP3, right? But of course, as price go according to your direction, you might want to always protect your trade by shifting your stop loss, all right, minimizing your risk and etc. Right, so this one setup on dollar yen. I'm gonna screenshot this for your reference later on as well. Right, so we have a quick one walkthrough from this webinar. Right, you have few opportunities already on euro, dollar, as well as dollar yen. Right, so let me go now to Aussie dollar. Right, Aussie dollar is also another interesting one, because I think we shared with you guys, right, we shorted this pair on NFP day as well. Okay, so let me bring you to daily perspective, what I'm looking out at. Daily perspective wise, right, I'm actually looking at Aussie dollar, right, falling one more move down, right, expecting it to move one more move down, towards this area highlighted over here around 70.90 to 70.60 area. All right, and then I will be expecting a huge correction from there. All right, towards the upside. But before that correction, we might want to be patient, because I'm still expecting one more move down. Right, so in other words, I don't feel that it's the right time to long Aussie dollar as of now, but we'll still be looking for opportunities to short it, right, all the way until price actually hit around 70.90. Right, so that's about 300 pips of room that we can still capture. It's a pretty decent move. Right, so going down to lower time frame, all right, that's what I'm seeing. This whole move upwards, all right, is actually a very corrective move only, because on the bigger scheme of things, you can see it's a downtrend, all right, and this move is actually just a correction. So what triggered my entry on Friday was again NFP. Fundamental comes in, all right, it's a positive sentiment for dollar, all right. You can see price push down over here, and then that's where we entered, somewhere around 73.15, right. And of course, stop loss is just above here at 70.60, all right. So this is a very tight stop loss. We are currently in a very small drawdown, okay. But even if it hits our stop over here, we are not worried, because the stop loss is so tight. Right, it's just about 60 pips away from where we entered. Right, this kind of risk is very small, because when we capture this, we're going to capture at least another 300 pips move from here. Right, so if you haven't entered on that, let me just take a quick look and see if you have any decent opportunity. Right, again, you can see that currently price is testing this 61.8. So for those who haven't entered on Aussie dollar, you can actually right now enter at market. Okay, I'm going to walk you through this particular trade setup. Okay, over here, you can see price actually form a double top. All right, RSI quite clear is showing you a divergence, because price actually move in terms of form a double top, but your RSI actually prints a lower high. Okay, and the condition is this is the neckline. Price actually broke below the neckline. Okay, and right now it's actually retracing towards higher up. Right, and what we are looking out for is we're gonna pull Fibonacci 2, all right, from the previous high to the recent low, all right, and we'll be looking out for the 61.8 Fibonacci level. All right, so right now you can see price has tested it and is currently trading around this area. So for those who has a trading plan on trading this, all right, this is the divergence strategy. If you have a trading plan trading this, you can actually decide to short it right now. All right, and your price will be your entry will be here. Right, the stop loss has to go above the previous double top. All right, give it a little bit of room for price to move around, as well as for spread. All right, your first take profit will be at your previous low over here. Okay, because this can act as a form of support. And then take profit 2, you can go for the 127 extension. Right, 127 extension. Right, you can aim for that. And of course, if you want to go for the trend, the huge move, you can actually aim for 70.90. Okay, 70.90, that is about 300 pips away from where current price is. It will be a very good trade if you can wait and capture, be patient and capture. All right, and of course we are expecting that price is going to go down from here. All right, so this is a classic example that we do have one trade that is potentially right now running as well. All right, so I'm going to screenshot this and give you as reference later on as well. All right, okay, so since this trade is live, I just want to do a quick check. Any questions that you guys want to clarify regarding this Aussie dollar trade? All clear? Okay, I think it's pretty, if you have been practicing and such, it'll be quite clear to you, all the 3 strategies that was covered in the masterclass. All right, and it will become very clear as to how we actually apply it in a live market environment as well. All right, but of course we always also like to share that do not just limit your trading tools and arsenal to just the 3 strategies that we teach you, all right? Because if you have your own strategy, your own personality, and your own trading style, all right, always feel free to complement each other, right? Because whatever works is actually the best strategy for you guys. Okay, that means if that strategy work for you, that will be a good strategy for you, all right? But doesn't mean that one strategy is going to work for everyone. All right, so Aussie dollar, if we can, I don't expect much movement today, but before we end the webinar, we might take a look back at Aussie dollar, all right, since we are also on this trade. Kiwi dollar, all right, it's actually very similar to Aussie dollar because this two is very closely correlated. All right, this I'm going to show you on daily time frame again what I'm looking out for. All right, very similar to Aussie dollar. All right, we are expecting one more move down. Okay, but on a very grand scheme of things, all right, what I want to show you over here is that since late 2015, all right, this entire move since 2015 is actually in a corrective move in a very big scheme of things. Okay, so once this move comes down over here, we expect another move, all right, a very huge move around from 6690 to towards 7830. All right, this kind of move, right, or this kind of trade, if you can capture it, is going to be over 1,000 pips. All right, and if you have the opportunity to capture one of this particular trade in that direction, I would suggest that you want to hold it as far and ride the trend as much as you can. All right, so but that's on a later part of this year. All right, when this happened, of course, we'll update and remind everyone else again. But as of now, all right, I'm expecting one more move down, all right, which is very similar to Aussie dollar. All right, so I'm going to show you this one, all right, which is similar, but we didn't short Kiwi, we short Aussie instead, because Kiwi swap is pretty expensive to actually hold on short, so I decided to short Aussie instead of Kiwi. All right, so right now, again, this candle that you see over here, this very strong bearish candle, is actually it came from NFP. All right, so if you have traded during then, it has been a valid breakout strategy as well, to actually short Kiwi dollar. Right, so if you haven't shorted, and if you are still looking for opportunity to do that, it's going to be very similar to what we have here on Aussie. All right, again, you can see here double top or even triple top with RSI divergence, right? Waiting for price to retrace back up towards the 61.8 Fibonacci level, and then that's where we short it, all right, in expectation that it's going to go lower, right? And you can see this 61.8 Fibonacci level confluence with your very strong psychological level of 0.77 even handle as well. Right, so if you are looking for opportunities on Kiwi dollar, you can short here. Your stop loss above your previous high, give it a little bit of room. Your take profit 1 is over here at your previous structure. Okay, take profit 2 is here using the 127 extension, and of course take profit 3. You can actually follow this targeting as low as 68.02. Okay, even lower, somewhere around further lower. All right, so if you are looking to short Kiwi dollar, my suggestion to you is pay attention to Aussie dollar as well, because both of them move very closely together. Okay, you do not want to have your risk on two very similar currency. Okay, so two scenario is one, you choose either one to short it. Second way to do it is you halve your position size and then just trade one of the particular. Then you can trade both. All right, if you halve your position size, then you can trade both of it. Right, that's a Kiwi dollar. Dollar Canadian is interesting because I'll show you on daily time frame what's happening first. Right, daily time frame again very similar to Kiwi dollar. All right, since the Kiwi dollar is 2015, but dollar CAD is since 2016, which is last year. The entire move is actually a corrective move. All right, and once this correction ends, we expect another huge down move towards the downside. Okay, and you can see that we expect it to end around 1.3815, and we expect price to move to 1.1865 later part. Right, this might come in as long as in June 2017 or even later part of this year itself. Okay, so this is another potential trade of the year opportunity. And you can see this move itself can be as much as 2,000 pips. Okay, so if you manage to catch one of this move again, hold on to it as much as you can, ride the entire trend if possible, and then of course keep adding on positions to it. But before that happens, all right, we expect one more move to the upside. All right, and the important, interesting thing is right now price is actually at the current support of this trend line. So if this trend line actually holds, we might and very confidently say that if this trend line holds, we can see dollar Canadian reaching for at least 1.3815. Okay, so let's go to lower time frame to see if we have any opportunity. All right, that's where I say that this structure will be crucial, because if price bounce, it's gonna go up. If price break this, we can expect more downside already. Okay, so I'll bring you to the chart to show you if we have any decent opportunity they can take note of. Okay, I plotted this over the weekend. We can see that there's also some form of divergence happening over here. All right, price prints a lower low, but our RSI is printing a higher low. Right, but it's not ready to enter as of now because this neckline is here. Price hasn't break and closed above it, so you need to be patient, give it more time. If price does this, then you can wait for a 61 divergence strategy. All right, pull fit, wait for a 61 entry technique. All right, so let me just draw the arrow. If price decide to break higher, okay, which highly likely that's what's gonna happen, then wait for the retracement, and when the retracement comes in at 61.8, look for the opportunity to take the trade towards the upside. All right, so this is not yet ready. Wait for that break to give you that confirmation. All right, I'll just do a quick screenshot for reference later on as well. Okay, and why I say that high chance that dollar CAD is gonna pop to the upside is because if I show you on oil, since we're on this, let me move to oil market as well. Okay, oil, you can see that today, right, is a huge drop to the downside. It's not a surprise because technical analysis, we already prepared that and forecast that it's going to drop. Right, so if oil prices drop, Canadian dollar is going to be weakened, and when Canadian dollar weakens coupled with dollar strength, right, this pair is going to go up. Okay, so technical wise and currently the current sentiment on oil side comes in to support the case that dollar CAD is going to go higher. Right, so that's a quick one. If you're looking for opportunities in this particular week, right, might not be today, might not be in this trading session, but in this particular week, keep a lookout on dollar Canadian, okay, because it might give you this opportunity. This setup might happen this week itself. All right, last major pair, all right, dollar franc. Okay, dollar franc on the daily perspective, is actually not doing much. Okay, it's currently, after this huge breakout, it's currently just consolidating. But I'm expecting one more up move towards 1.0620. Okay, currently it's at 1.0170. That's about actually quite a huge move. It's about 500 pips movement, slightly less than that. Okay, but it's still a very decent room for you to catch a buy setup. Right, so sentiment and direction bias wise is actually towards the upside, and then you just go down to lower time frame to spot for any opportunities to look for it. Okay, for now I'm not actively looking out for opportunities in dollar franc, but just to share with you that very similar, you do have opportunity coming in as well. All right, what you see over here is it seems to form a double bottom. All right, not the best example and not the most ideal example over here. Okay, but it's still some form of bottoming formation, and your RSI is obviously printing a higher low. Okay, and this neckline has been broken. All right, no doubt about that. So what you need to wait for is just pull in your Fibonacci tool, wait for that 61.8 retracement, that gives you that reason to take a long trade. Okay, so wait for this to retrace and then back down here around at 1.0130. That's where you can take a long trade towards the upside. All right, so if you long here, your stops has to go below your previous low plus a little bit of room for it to wiggle, and then of course your take profit one will be your this immediate structure level. Take profit two, you can use the 127 extension. All right, and of course take profit three, you can follow the overall direction that I identified for you over here, right, at 1.0620. All right, so you can actually hold this trade if you manage to enter at the bottom of this. Right, so very quick, almost all major pairs has opportunities for you to look out for in this particular week. All right, so again, for those who are very impatient and afraid that there's no trading opportunity, is actually not the case. All right, every time you actually can get and find opportunities to trade in the market. All right, so any questions that you guys have? All right, we went through all the major pairs. All good? Okay, then I'll quickly point to you some of the higher potential trade or that you want to take note of going forward. Okay, so you can see that pound yen is a very good trade. I'm not sure John is in this webinar today. All right, but John, I have been following this pair for him pretty tightly since late December. All right, for us, we don't trade after. Basically, I don't trade at the last 2 weeks of December, right? And not very actively on the first week of New Year as well. Okay, but John has his own style, so he literally trade through Christmas and New Year, and even last week he was very actively trading. All right, so he managed to catch quite decent opportunity on pound yen. All right, I'm not sure exactly where he entered lah, but I'm pretty sure he actually entered somewhere one trade on 145, and then I think recently he entered again and took profit of it. Okay, so for you guys who are here, all right, use the Slack channel group to feel free to ask. You know, if you're trading on any particular pairs, and if during that week I didn't do that analysis for you, all right, feel free to also ask if you ask, you know, if what is my opinion and such on that. The reason is very simple, because if I do the analysis for you, it might also benefit me, because if the opportunity is there, I might also take that trade. Okay, and sometimes I might be busy that I might miss out opportunities also. All right, so if you guys ask some of the charts, it might also benefit my own personal trading. All right, so for example, this one, definitely I miss the entire move towards the downside, but of course I miss it is because of my trading strategy, right? My rule say that last 2 weeks of December I don't trade, and that's why I didn't take any opportunity from here. Right, so this is one good example. Euro pound, nothing much. Aussie cat. Okay, Aussie cat is something that I would like to just share with you guys also, because today, if I'm not wrong, I shorted somewhere around here at 9690. Right, so right now it's trading at about 30 pips up at 9720. Right, so as long as this high, which let me highlight for you, this high over here at 9740 is not broken. That means as long as price remains below 9740, I'm still bearish on Aussie Canadian. All right, so I'm still expect one more down move towards the downside, targeting around 0.9560 area, and then from there I'll be then starting to expect price to go higher. Okay, but as of now, as long as this high over here is not broken, I'll be expecting a short, one more move down towards the downside. Okay, so this is a very short-term one. Of course, for those who are looking for bigger opportunities to take trade, I think on H4, right? This is what I'm expecting. If you are not interested in this short move down, be more patient. All right, wait for price to come down here first, then you can take this very huge opportunity to the upside. All right, again, this kind of move is at least 300 to 500 pips. All right, sometimes up to 1,000 pips movement. Right, but as of now, just be patient on dollar Canadian. If you have if you have shorted it together with us earlier today, just leave your stops there. All right, as long as it doesn't touch there, we are still down bearish on Aussie Canadian. All right, and of course, if it touch there, just get out of this trade and then look for another opportunity. All right, Kiwi Cat, of course, is very similar to Aussie Cat because they are kind of correlated. Right, so between Aussie Cat and Kiwi Cat, I would say Kiwi Cat is less clear in terms of what is developing, but Aussie Canadian is clearer. All right, so that's why we shorted Aussie Canadian. Okay, Aussie Kiwi is another interesting one because late last year, if you have been following very closely on what I've been sharing, Aussie Kiwi is a very decent opportunity on even on the daily perspective. Right, I was saying that this level will be interesting to watch because once price comes down to it here, a very high probability is going to shoot up all the way to 1.1215 area. Okay, right now it's trading at let me just quick check 1.0. Okay, 1.05. Okay, from 1.05 to 1.121. Okay, that's about 700 pips. Right, so if you manage to catch this, right, hold it out for that because this is the closest to becoming trade of the year if you manage to capture the entire move. Okay, so if you want, what you can do is just use a trailing stop methodology. Okay, and keep your TP open because you want to ride as far as you can. Okay, but as of this, because first week, this happened on the first week of this year, and I don't actively trade the first week. Again, I missed this opportunity. So right now I'm waiting for some form of retracement back down, okay, before I take another trade. All right. So again, I don't hop onto it just because price has moved accordingly in the direction that I favor, but I want to be following a certain plan as well. Okay, so again, I'll be waiting for price to come down before I take another opportunity to buy on Aussie Kiwi. All right, just to share with you if there is any opportunity on Aussie Kiwi, right, that you can look out for. It's of course there is one happening. All right, you look at this. This is one swing up, a correction, a retracement down. All right, and then of course another swing up. Okay, so of course this would become your support structure level. Okay, and this is called the structure trade strategy. All right, if you just pull in your fit from here to here, the recent swing. Okay, insert in your fit to find confluence. All right, actually it's more on 38 and 50. You can see that this is actually your confluence of structure and Fibonacci. But again, I don't trade. I don't advise you guys to take trade off the 0.38 retracement simply because if you put your stops below this, your initial first take profit is here. Is a very negative risk to reward. Right? Of course, you do not want a negative risk to reward trade. But if you decide to take profit way higher, right, and then your risk to reward becomes healthy, you can still consider taking trades off the 38.2 Fibonacci retracement. Okay, so that's where I share with you guys that you need to know what style suits you and what you are comfortable with. Okay, so this is one opportunity that you can look out for. Right, I'll remove this, but I'll just screenshot this to show you in terms of structure what's happening. Right, I'll drop all this chart into the Slack channel later on. After the end of this webinar so that you have reference on all the charts that we have went through in today's session. Okay, so again, this is going to be a very good trade for this year. I'm going to keep very close attention on this. Right, another one I want to do a quick sharing is Euro Aussie. All right, Euro Aussie is another trade that we just took this evening, right, this afternoon actually. So this is what's happening. Okay, on a daily perspective first, because this is another potential trade of the year trade, right? This is what's happening. Need to zoom in a lot, zoom out a lot to show you really what's happening. So from over here, from early 2015, all right, this is a huge impulse up move, right? When I mean impulse means it's moving very strongly upwards, and then from 2015 around September period, all right, the entire move down is actually a correction move. Okay, so once this correction is ended, I'm expecting a very huge upside because after one impulse, one correction, I'm expecting another impulse towards the upside. and how far it can go. It can go, and as in we can expect it to go as high up as 1.7350. Okay, so right now it might seem almost impossible for price to move that high because currently price is just at 1.43. That's about 3,000 pips. Okay, so it looks unlikely, all right, but I wouldn't want to discount the fact that it can happen. As short as within a year time, okay, which is it can happen within 2017 itself, right? So this is another opportunity that I might say that if you catch it, write it all the way back up, right? But before it's gonna go up, what we look is we zoom down to smaller time frame to look at the details. So the details kind of point to me and show me that we can still expect more down before it starts to go up, right? And that's why today I actually shorted on Euro Aussie as well. Okay, because I expect another one more move down, minimally towards 1.42. Right, if I'm not wrong, we shorted somewhere about 1.44 area or 1.44 or 1.4410 area, around there, right? And then of course stops is above 1.4470. That's about 60 to 70 pips stop loss, right? And we are targeting as low as 1.42225, right? So that's more than 100 plus pips already. Okay, so if you are still looking for opportunities on this or haven't entered on this, let me just do a quick show check if you have any opportunities that you can continue monitoring. Okay, not really on hourly time frame, all right. But if you want to follow through this particular trade or for this trading session, okay, you can actually drop down to lower time frame, and it becomes very clear that what's happening over here at lower time frame. You have this high to this low, and then price retraces, and then price break lower, right, and then it retraces, and then right now is breaking lower as well. Okay, so this becomes your immediate structure level. And if you decide to pull in your FIB, you can see that there will be a confluence of 50 to 61.8. All right. So this is on 15-minute time frame. Okay, so if you are looking for opportunities, intraday means just to pinpoint shorter term time frame, all right, basically means you expect to take this trade and exit within this trading session. This is a good opportunity that you can look out for. All right, so this will be looking at short around the 50. All right, stop loss is slightly above this. Take profit 1. All right, your risk to reward, you need to take note of this. All right, if it's less than 1, you might want to seriously consider whether you want to take this trade. But of course, if you go for the extended target of 127, right, your risk to reward would definitely be more than 1 to 1. Right, just do a quick show. Okay, so if you take target 2 at 127 extension, you can see your risk to reward is 1:1.5. All right, pretty decent. All right, I'm going to screenshot this again. All right. All right, so this is for Euro Auth. Just to take note on that. Other than that, not much in terms of other pairs for opportunity. All right, of course, Euro Kiwi, if you look at it, is going to be very similar to Euro Aussie. Just that the development on how price move is slightly different. Okay, this haven't break the structure, but Euro Aussie broke it. So that's why we actually took the Euro Aussie and not the Euro Kiwi. All right, but overall, in terms of the similarity of it is going to be pretty similar. We're going to expect one more move down, right, before another move towards the upside. Right, so if I show you on Euro Kiwi as well, it's very similar structure playing out. Right, this entire move is impulsive, this entire move is corrective, and then we are expecting after the corrections and the move is going to go as high up as 1.979 T. Right, again, you can see this kind of move, you do not want to miss it. Okay, it can happen as fast as within a year, because this move over here, right, it happens as fast as from March or from April 2015 The high is actually in August 2015. Okay, so that's as fast as about 5 months only. So it can happen in 5 months in 2017 as well. Right, so that's the few setups that I want to share with you for this year. Okay, so basically, I mean this year is like trade of the year. If you manage to catch the bottom, ride it as far as you can up to the top. Right. Any questions you guys have? Right. So that's about it. For this quick sharing. All right. Because it's the first week of the year, there's nothing much I can really share because COT wise, it's not updated yet. It's not out. All right. And then the week is just started. All right. So we still need to wait for some economic data coming in, and then of course some political scene like Donald Trump stepping in and etc. All right. So as we progress, we get more and more information on all these things. We'll be able to discuss and talk about it more. As of today, this is the first week of trading. All right. So there are already some opportunities, and then just take it slow. All right. Start off slower, as in better than you just decide to just take things too quickly. Any questions? All good. Okay, what about gold? All right, let's do gold. Okay, I'm going to share with you. Gold is another one, right? That this one I think we anticipated, not anticipated. We shared this late last year as well, right? We expect that the bottom of gold is somewhere around this area, right? 1116.5. All right, we expect the bottom around there, and then from there on, we expect gold to move as high as 1465. Okay, you can see that it has started to move up. All right, but again, I would like to always say don't jump onto a trade. Right, so let me zoom in on the lower time frame perspective. What is happening? This move up, all right. If it really wants to go higher, what it needs to do, it needs to do some form of correction. All right, it needs to retrace because price cannot go one way up without coming down. All right, so price needs to do this. Let me show you that too. Okay, price needs to do price needs to do this. All right, price needs to do some form of correction like this, and then from there it's gonna go up again if it wants to go up. Right, so wait for this to happen. Okay, and then that's where opportunity comes to actually take that trade up. As of now, it's not a good price for you to start buying. Okay, because it needs to come down. So if you buy now and it comes down, it's gonna be in a drawdown. So it's best not to hold any trades with that kind of drawdown. So just wait for this to happen, this retracement to happen, and then you can wait for it to go higher. Okay, how did this retracement can come down? Right, just a quick one. Just pull in the feed. All right, I just do a quick share how deep it can go. Right, this retracement can really come in as low as the 50% Fibonacci level, or it can come down even lower towards the 61.8. Okay, so wait for that, be patient, wait for price to come down first, and then around this area will be good opportunity for you to look for a buy opportunity. Okay, so if you want, you can look for that. And if I zoom in to even 1 hour time frame, yeah, okay. I haven't do the count exactly, all right, but roughly based on visual look over here, it seems like short term wise is topping off, all right, and it's gonna come down. Okay, so opportunity is upside, all right. That means buy on gold, but not to buy now. Wait for the retracement back down first before buying gold. Right, so this was done sometime back as well. If I remove everything, okay, this is some form of bottoming out. Okay, RSI has some form of divergence as well over here. Okay, then if you just simply follow and pull your fib as well, if you pull it from the second bottom, again, wait for that 61.8 Fibonacci. Okay, wait for this retracement. If it doesn't come, it's okay, because if you're gonna go higher, at some point of time, it's gonna come down. Okay, when it comes down, then that's where you want to take the trade. Don't take the trade right now at the top of this move itself. Okay, so I'll give you the zone as of now. I will update this as price comes nearer to the opportunity where that we can take the trade. But as of now, just on top of the head, right? Okay, let me just screenshot this and then I'll just share with you later on as well. Right, 50% at 61.8 Fibonacci level is the level that you want to pay more attention to take the long trade on gold. Okay, let me just do a quick check on silver. Okay. Okay, very similar between gold and silver actually. You can see that this move is also towards the upside. Okay, once this entire move is an impulse move, this is a correction, right? So once this correction ends, we're gonna expect one more up towards 23.15. Again, you do not want to miss that if you manage to catch the opportunity, right? So between gold and silver, I would actually prefer to trade silver, if possible, right? Of course, the opportunity must come valid, okay? But I'm actually more in favor of taking silver trade rather than gold trade, right? And very similarly, silver wise is wait for the retracement to come. Okay, it's gonna come down, and then after that, wait for the retracement to take that trade. Okay, just show you on the silver chart again. Okay, silver is more obvious because you look at this divergence. Okay, this divergence is more obvious than the gold one. So wait for this. You can see that this neckline has also been broken. Okay, if you draw in your fib, that 618 is down here. Wait for price to do that retracement. It's gonna come down, all right? So just wait for it. When it's gonna come down, when it's gonna reach this, I do not know. But high chance that it's gonna come down first before it's gonna go up. Okay, so you can put your position here, stop loss below this, and then take profit. Of course, take profit 1 and 2, you can set it accordingly. But I would want to strongly suggest that if you enter somewhere around here, 16, okay, if you manage to capture silver at 16, just at least hold one position and ride it as far as you can above 20. Okay, because high chance it can go as high as above 20. Right, so I'm going to screenshot this to share a view on silver as well. Okay, any other questions other than gold and silver? Right, good suggestion on gold. All right, so we can keep a close look on gold for next week. All right, I don't think this is going to happen for this week, but next week itself, gold will be a good one to look out for. All right, this might take some time, so gold is going to be a good one for next week. Any other setups or any other things that you want me to take a look out on? All good. Okay, if it's good, we'll have this webinar rather shorter today. All right. Then as we progress throughout the week, throughout the year, we have more things. We will discuss more on it. But if you after this webinar, you decide to and you think through and you want to have some opinion on some other things, or you have any other questions, just feel free to ask it in the channel. All right, and then I will answer your questions and such accordingly in the channel group as well. All right, so for those who missed the front part of this webinar, again, this will be recorded, uploaded, and then once it's on the website, on the portal itself, I'll let you know. Okay, and then you can go and recap on it, or if you missed any part, you can go and refresh on that aspect. All right, so with that, we'll end this session over here for today. All right, and then I'll see you guys again in the next webinar next Monday. All right, so good night. Bye-bye.